Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, August 20th, 2019, and this is the Daily Report for Gold and Silver. After yesterday's sharp and dramatic sell-off in both gold and silver, we have seen both of those precious metals recover and recover nicely, with silver trading back above $17 per ounce and gold holding $1,500 per ounce and trading higher off of that. Tomorrow we will read the minutes from last month's FOMC meeting, in which the Federal Reserve actually implemented the first rate cut in quite some time, I believe since quantitative easing back in 2008, 9, and 10. And we have Powell speaking at the Jackson Hole Symposium on Friday. So we can expect to see some events that could definitely move the precious metals markets. Speaking about the metals, let's take a look at current pricing. Gold is gaining on the day, up approximately $6, $5.90 to be exact. Current print, $1,517.50. The high today, $1518.80, and the low, $1503. In terms of the advance, about 0.4%. Silver really shining on the day, back over $17 at $17.13 after gaining 19 cents on the day, 1.12%, high $17.17, current $17.13. Now, we did have platinum trading lower on the day. Remember, those two traded higher yesterday, down $5.30 at $851.50. And lastly, palladium gaining approximately 6 to 7 tenths, $9.60 at $1483.90 as it edges closer to current gold pricing. That was all aided with some slight tailwinds from a weaker U.S. dollar, but traders, the dollar is still above 98, and that is significant. Let's take a look at our current studies. A strong finish and nice recovery for gold and silver pricing today. When we look at the lows over the last 2 days, we do have what is really called a flat bottom or equal lows, in which we had both days trading to 1503 and 1503.30. We're also looking at a 2-day pattern now called a piercing line. That is a bullish reversal pattern, and that of course is coming after we identified Friday's candlestick pattern as an engulfing bearish and actually received confirmation of that yesterday with yesterday's decline. That's what prompted some concern. I did not move our stops on record, but I did suggest an alternate strategy of putting the stops at 1502.16. In any case, all stops are safe with the market well away from that, at least for now. If you recall, over the last couple of days, we have been looking at the overall characteristics of this most recent move to higher ground in gold. We talked about the fact that really what we've been seeing is solid price spikes to the upside, followed by some sideways action. And to really clarify the sideways action, it has really been trading in a narrow and defined range, as you can see right here. In other words, it is sideways, but it's making a series of lows and highs as it moves. And what we're seeing is a very similar action now, in which we've seen the market come in, break above 1500, and that is significant, traders. And now we've got this narrow band that it's trading in. Now, this week could absolutely prove to be different, in that tomorrow we have the release of last month's minutes from the FOMC meeting. The rate cut that came in was voted, I believe, 10-2. So we did have two dissenting votes, and market participants are going to attempt to glean really the hawkish or dovishness of the current Fed stance, because the statements made by Jerome Powell immediately following the end of the FOMC meeting did more to confuse or bewilder analysts and traders than it did to clarify it. We want to know how many rate cuts the Fed is planning on implementing, because they did not release a dot plot giving us their strategy. Then, of course, on Friday, we've got Powell, who will have a major speech at the Jackson Hole Symposium, and my sense is he will look to clarify the ambiguity that he professed last month. To that end, I am looking for increased volatility, and I do believe we will see higher pricing. Of course, right now we've got the highs that come in just above this 1540. And that, of course, came in on this single candle right here. And I think that will make a play for the upper levels of our projections, which come in at around 1561. You can see that right here. That is a 1.618% extension of the last leg of the wave that we have identified. This has been Gary Wagner, wishing you, as always, good trading. Maintain your current long position. Maintain your stop. We'll talk to you tomorrow for the next daily update and review. Bye-bye.